My name's Kim Heras. I'm a co-founder of a startup studio here in Sydney called 2515, and I'm the founder of the Sydney Fintech Meetup. And we're here tonight to try to see how we can better connect the London and Sydney fintech scenes. There's lots of activity happening with both, and we feel there are some good connections.
And what do you see happening in Sydney in the next couple of years?
Okay, well there are a number of different spaces that are starting up. There's Stone and Chalk, which is a central hub of activity. A really successful Australian fintech company, Tyro, has their own space, the Tyro Fintech Hub. So we've got two awesome new spaces that aren't that far away from each other. You've got a few different funds. In the past you had Reinventure and AWI, and now there are more funds being created and more funds, larger funds looking specifically at fintech. You've got more angel investment happening, so you're getting support for the grassroots or the earlier stage stuff. From what we can tell, there are more people looking into fintech. And I think as well what we're starting to see are much better connections with fintech hubs around the world, in particular London, but also Singapore and New York. So lots more.
And why should British fintech companies consider Sydney or Australia?
There are a couple of reasons. One is Australia, if you just look at population, isn't a large country. It isn't. But there are some areas where we do operate at scale. So for instance, the superannuation funds, third or fourth largest pool of capital in the world. And if you operate in that space, managed fund space, you can operate at scale in Australia. There are very big opportunities for global players in Australia in that space. And to be honest, traditionally, the market leaders in that space have had the run of the market for quite some time. And so we haven't gone through price competition yet. We haven't gone through this real segmentation of the market the way it's happened elsewhere. So there's definitely opportunity in scale. The next thing you have is there's a new payments platform that's being soon to be built in Australia. It's a real-time payments platform, but the way Australia's done it, it's different to the UK or other places, are these overlay services that sit on top of it. So it's almost like a blockchain for the non-cryptocurrency world where information can be passed with transactions, and that's going to be really interesting in terms of what it enables. We all know the future of banking is probably mobile banking. Mobile penetration is through the roof in Australia. We've also got a very sophisticated financial services sector. And then the other thing is, time zone wise, we're very good in terms of our proximity and to Southeast Asian markets. And because of that, there are some attractive features of Australia for companies that are looking to Southeast Asia as growth markets for them. Naturally, you want to be on the ground in those markets, but if you want to be somewhere friendly with a legal system you understand, kind of cultural things that you understand, strong and robust financial services industry with good government support, you can operate out of Australia and still have access to those markets elsewhere. So there are lots and lots of different reasons. But I honestly think that we'll see how it plays out in the end, about the effort and that's coming together to try and create this cluster of activity in Sydney, plus the increase of activity that's happening from the grassroots level all the way through. We'll see definitely Sydney being somewhere that's relevant globally. How relevant it becomes will really be a case of how well we kind of execute on what we're trying to do.
Any final thoughts on Sydney or the fintech scene for British companies thinking about coming out here?
Come down, check it out. I know it's a long way, but it's warm and it doesn't rain much. It's awesome.
Perfect. Excellent. Thank you so much, Kim.
Good evening. I'm Daniel Foggo. I'm the CEO of RateSetter Australia, which is a peer-to-peer lending business. And just brief background on RateSetter. It was set up in London in 2009. We started on the ground in Australia in 2012 and launched at the back end of last year to consumers. There's three topics I'd like to just quickly cover within my time allowance. I think the first thing is just some of the comments on London. I think we can provide some observations on London in that we come from the UK, if you like, and particularly, what sort of positive environment is there for fintech. Secondly, what drew us to Australia, and then thirdly, we can just make some observations about When we sort of, I've obviously spent a lot of time in the UK. I worked in the UK for 10 years. I then went to the UK to find a business model that I thought would work well in the Australian market. It was pretty clear when I went to the UK in 2012 to find that business that actually there was a recognition already at that stage that fintech was a positive thing, that it could actually bring a lot of benefits to the financial system. And my own analysis was that the financial system was a little bit out of control. You know, financial services as a proportion of GDP had more than doubled over a 20-year period, and had gone from really being a lubricant to our economy to sort of being more of a friction. So I think that's a great starting point that exists in the UK, and I think there's a recognition at all levels that actually fintech can bring huge benefits to consumers. It can bring competition and diversity and all of those other really important things. There's a recognition that can actually really help GDP grow, partly from the points I was making earlier about becoming more of a lubricant, but also because London is a financial centre. This is the direction that financial services are going, and it's important. They recognise over there that it's really important that London's at the forefront, or they're going to lose an advantage. And part of that is actually as an exporter. I guess RateSetter in Australia are an example of that. I think what is quite amazing, and something that we may aspire to in Australia, is the political and government support that fintech has got in the UK. I think it's actually not really well understood here how extensive that support is. I mean, you commented on some of the things around investment and so on, but it goes much further than that. And if we look, focus maybe more on peer-to-peer lending, which I understand a little bit better. I mean, first of all, there's Innovate Finance, which is more broad than peer-to-peer lending, but basically the government is behind an organisation that is actually providing fintech a voice and access to government and access to really important decision makers. Advantages that incumbents have in financial services, and an example of that is credit information. They are legislating it such that certain credit information needs to be provided by incumbent lenders to credit bureaus, and it's available to alternative finance providers. I mean, that is huge, and that's something that we really encourage Australian politicians and the like to really look at. They are facilitating tax advantages both on investment and actually beyond that in peer-to-peer lending, and part of that in peer-to-peer lending is actually making peer-to-peer lending pension or superannuation friendly, so that you can actually invest in a tax shelter into peer-to-peer lending, which is a really huge development in the UK. At the moment, you can invest £15,000 a year in a tax shelter, and it may be in cash or equities, but there's going to be a new category soon, it's expected, which will be peer-to-peer lending. And so the government's recognising that's actually it's a little bit perverse that the government's doing that as well, because bear in mind they are the largest shareholders in two of the main banks in the UK, yet they're doing everything they can to move people away from those banks and into peer-to-peer lending. I think that they really realise the benefits, though, and it's sort of coming back to what I started with, and I think RateSetter is an example of this, and excuse me if it's a little bit of a plug for our business, but they do see peer-to-peer lending as actually a way that's well managed, and people are aware of the risk. People actually boost their savings, and that's why people looking to save for their retirement and pensions, they are actually wanting people to do better during their lifetime with their savings and have more money when they retire. They're also wanting to take away systemic risk in the financial system from the taxpayer to those that actually have the money to invest. And so they're doing that through peer-to-peer lending. That's one of the ways that they can do it. And people need to be aware of the risks, but it's better that the individual takes it than the taxpayer. If we look at Sydney and what drew us here, there are all sorts of things. I guess Australia first up, we looked at the banking system here. I worked with the UK RateSetter team. We analysed this market. We looked at what the bank's margins were. We realised it was a much less competitive loan market than what it was in the UK, and that's what got us very excited. We also noted, some really favourable things for starting a business. The tax deductibility of your investment in development teams, R&D and so on, is actually hugely advantageous. And actually a lot of people aren't even aware of that. I think that you've got that foot up. We also like the idea of Sydney as a base for, it's seen globally as a serious financial city, and we wanted to have a base for growth into Asia. And so I think we've got a start here in Sydney now, and hopefully we can use it as a base for growth into different markets. I think also one of the things, which might sound a little bit perverse, because there are a lot of fintech companies who are sort of, I think in some ways fighting regulation rather than embracing regulation. We actually looked at the regulatory environment here and saw it as really positive. You talked about some startups, regulation being a good thing. I think that's absolutely the case. In the peer-to-peer lending space, the three largest peer-to-peer lenders clubbed together, that's RateSetter, Zopa and Funding Circle, and they did form a peer-to-peer finance association, and they did lobby government to actually regulate the industry. They thought that that was important to ensure the long-term sustainability and success of the industry, to de-risk the industry and actually make it really safe for investors. And so they actually set the bar here, and then they asked the regulator, and I actually saw where the regulator bar is versus the bar that they set up themselves, but so regulation in our minds is actually a very important thing. When we look at Sydney or Australia, I think we're really fortunate, and ASIC gets a lot of sort of, gets bashed around the head quite a lot, or has negative publicity around its approach to some of these things, but we spent a reasonable amount of time with ASIC educating them about peer-to-peer lending, and getting an Australian financial services license such that we could accept retail money. And our view is actually that they do a very good job, and that actually they're surprisingly flexible. And so the thing that they're most focused on is consumer protection. And I have to say the process we went through with ASIC has made our product a better product, and has made it better for investors, and has helped us on a day-to-day basis now. So we're really sort of encouraging of the regulatory environment here. There's always edges that need to be sort of smoothed, and it needs to be made easier. But part of that I think is actually ASIC will sit down and listen to you. And actually in a lot of other environments, peer-to-peer lenders, even after they've been running for a number of years, have never met the regulator. We met the regulator well before we launched. I think that's something that's quite unique in many ways. I think in terms of the future of fintech in Sydney, I think it's really positive. I mean, you just have to look at everyone here, and there's a lot of familiar faces, and I think there's a lot of people who probably hadn't heard of fintech 12 months ago who are really getting behind it now. And I think in another 12 months there'll be a lot more people, which is really encouraging. I think there's obviously a huge amount of interest in investing. I think that we've got a lot of smart people here, and people who are now seeing the success of the industry, and I think more and more people are going to want to leave their sort of secure jobs and actually start looking at startups. And so I see that as a very positive thing. And I think as long as the fintech space is very focused on giving something better to consumers, focusing on value and on convenience, and making sure that they have a